Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at and answering a question which I've been asked many times over the last few weeks, especially since we topped out at $126,000 with Bitcoin, of where the market is going over the next 12 months. So I'm going to be having a look at this question by looking at a bigger overall picture of exactly where we are and where we seem to be heading with the various levels over the next 12 months. We'll also be having a look at one particular level where there will be a great trading opportunity, as the charts seem to be suggesting. So we'll have a look at that opportunity, and as per usual, I'll be running down on the various time frames as well as looking at the 60-day cycles to make head or tail about exactly where we are and where we're heading in the short, medium and long term. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in this video is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. And I just want to add that I'm not in the business of making predictions on this channel. I don't have a crystal ball and I have no wish in pretending to know what the future is. Just like anybody else, I don't know the future. However, what I do from time to time is I use certain chart tools like the Fibonacci retracement to look at certain targets on the basis of probability. That doesn't mean that those targets are going to be met. Those targets are just possibilities, and some of them have a higher probability than others. I've found this technique incredibly useful and beneficial in my own trading and investment, and as such I'm very happy to share those insights to add value to all the viewers here. And I just want to state that my primary and overriding intention is always to provide an honest and objective view in reading the charts as I see them, with the primary aim of staying on the right side of the trend. As you'll probably know from my analysis, if you've been watching me for long enough, that I remain always open, fluid and flexible, and when the narrative changes, I'm always happy to change that narrative. And the reason for that is to stay on the right side of the trend. Because I'm an investor and a trader, I need to be on the right side of the market. And before we get into the meat of the video, the bigger picture, as you can see from the default chart here, if you've been watching a wide range of videos out there on YouTube from various content creators, you'll find a wide range of opinions of exactly what the market is showing at the moment. So I wanted to clear something that has been on people's minds and causing a lot of confusion, and that is that are we in a bull market or a bear market? And the real answer to that is that we will never be 100% sure until we get to much lower levels with Bitcoin. However, the charts always give you a very strong clue based on probabilities. Now on this chart, what you can see here is the full evidence of where Bitcoin started and where we are currently. This is the BLX chart, which actually stopped in August 2025. So there's no more chart development here. So what you have here is the existing evidence. There's no such thing as hopium and speculation. This is the historical facts in the charts. And so far, if you're confused about where the market is going, as I said, nobody can ever be 100% sure whether we're in a bull market or a bear market, but on the basis of probability, this chart is giving you a very strong clue and a hint of where we are currently. And that is that from each of the bottoms of the market to the tops of the market, we can see the number of months it's taken for the market to reverse. So the first cycle here, it took 37 months from the bottom of the bear market to the top of the market before we went into a bear market. In the second cycle, from the bottom here to the top was 35 months. Then from the bottom of this cycle to the top here was once again 35 months. And so far, the evidence in the chart is that from the 15,400 bottom here to where we are currently, having topped out at 126,000 on 6th of October, it's taken 35 months. So whether you want to speculate that we're going to be topping out in 2026 in the first quarter or the end of 2026, or this is an extended cycle, or whatever your narrative is, please remember there is no evidence of that. The only evidence that's staring at you with the facts is that the 4-year cycle, as we are now, of course anything can change in the next few months, but until that happens, it's going to be speculation and conjecture. Until then, 126,000 is the top, and it's taken 35 months to get there. So we've had another 4-year cycle. The previous top was also a 4-year cycle. and the previous cycle to that was a 4-year cycle, and the previous cycle to that was a 4-year cycle. So the only evidence that anybody has got, without speculation, without the hope, is that we've had that so far, where we are today, on 8th of December 2025, we've had 4 4-year cycles so far, and until something changes, that is the fact. And the 4-year cycles are always 1 year down, 3 years up, 1 year down, 3 years up, 1 year down, 3 years up. So based on the facts of the charts, we have to only move forward with that in mind until and if anything changes. So we are expecting now for a 1-year bear market with another 3 years up in 27, 28 and 29. So with that context in mind and the last 15 years of the Bitcoin price, what can we actually expect over the next 12 months? And I want to show you this particular chart first. And that is that the last cycle topped out here at 69,000. And you can see quite clearly here that before then we topped out at 64,000. This was the first top, and we then got this double top. Since then, we made this high and got rejected, and this was in March 2024. And what we did do was create an incredibly important and very relevant chart pattern, and that is that we created this stunted or inebriated, whatever you want to call it, right shoulder. And the reason why this is incredibly important is that if you look left here, we made this left shoulder and then the head, and then this became the right shoulder. And this normally would break to the upside, which is exactly what it did over here. And usually the measured move from the bottom to the top, and please remember there are many ways of measuring these moves on these patterns. This is the method that I use and works for me. If you're using a different method and it works for you, then please carry on using your own method. I'm only here to share my method, and there's probably about 10 methods of how to measure this particular move. So this particular move here will probably eventually get to this level here of the 350% move from where it breaks out. So it broke out here. So we can see that it broke out at this point. And if we measure this move of 350%, then we're looking at a price eventually to get to 300,000. So please remember, this is not a prediction. This is just another tool of giving us some possibility that somewhere along the line, we should be getting up to around about the 300,000. It's highly unlikely, the way it looks to be going, to be any time soon in the next 12 months. And perhaps we'll make the 300,000 in the next bull market. And what I'm doing is I'm showing you the bigger overall picture for the next 1 to 4 years of where this price is more than likely going to go according to what the charts are saying. And on this method of the 350% move from the bottom of the head to the neckline, the charts would be revealing that there's a price possibility of 300,000 moving forward. But there's a lot of water to flow under the bridge until that happens. So we're going to have a look at some of the targets now to the lower side. But before I give you the targets to the lower side, just to satisfy the curiosity of those people who think that we're still in a bull market, and that may well be the case. Like I say, if you've been watching my videos recently, you'll know that I'm 80% bearish that we've topped out at 126,000, but I always remain open, fluid and flexible and give it 20% that we may go above the 126,000. So if that was the case, that if we did go to the upside, what are the other targets that you would see here? So if we use the Fibonacci retracement from the previous cycle high at 69,000 to the bear market low of 15,400, then you're really looking at two possibilities, and that is the 1.414 at the 128,000, and this is a level that I gave you previously, and the price came up to the 126 at that point. So it didn't get quite to the 128, but it got reversed on 126. But the next one is really a very important level, so that when we eventually do come back up, so if we do fall here in the bear market and then come back up, you'll find that this 1.618 is going to be a very important level, and where you would expect quite a bit of resistance as well as a big pullback. So keep this in mind, the 173, 174,000. This is the 1.618, and if you've been watching my videos over the last 5 years, you'll know that time and time again, Bitcoin has a very high affinity towards the 61.8 Fibonacci level. So this would be a high probability play whenever we get to this price, whether it's going to be in the next 12 months or in the next bull market, wherever that is, this is the level where you could be trading and investing very successfully. And if I do the reverse of that, and that is look at the targets for the lower side. First thing to note is that the bottom of the bear market at 15,400, from here, if you do the Fibonacci retracement to 126, which is the high at the moment as we stand, then these are the realistic targets that you really need to have a look at. And these Fibonacci levels, as the private members on this channel have found, have been incredibly accurate in giving us some sort of a probability play of where the price may be going. So the first level to have a look at on the downside is this one here at the 0.236, which is 77,000. And if you look to the right, you can see that it makes sense that that will bring it back to this support level. We haven't quite got there yet, but as you'll see with the way the chart is developing, it seems quite inevitable that we're going to be getting down not only to the 77,000, but to the tops of these here. And I'm going to show you one particular tool that gives an exact price down here, which I shared with the private members in the Saturday's video. But the other targets to have a look at on the downside are these here, 56,000, and that would make sense because if you take this line across here, you can see there's a lot of resistance here and a huge amount of resistance at this point. And then moving to the right hand side, incredible amount of support here. So this would be another opportunity of where the price could go to. And then we have the 50% Fibonacci level, which again is at the tops of these resistance points at 44,000. And if you look left here, a lot of resistance, support, support, and then support and resistance at this line. So again, these three seem to be quite high probability plays on the way down. So this is what the Fibonacci levels are saying. And if you want to look for, and while the lower targets may seem improbable at the moment, this is the 61.8 level down here at 32 to 34,000. And we know that Bitcoin has a high affinity towards that. So the ultimate target really, I would say, would be around 34 to 32,000. But for me, the higher probability play is going to be around the 40,000 here. So this is where the zone is for me, using other techniques, etc. So we'll see what happens here. But the reason why these are very important levels is that for those people who are trading and investing for the counter trend rallies, these will be the points where we should get the big counter trend rallies on the way down. So if you're looking for an exact target on the way down here, then we can use another technique called a VRVP, which is this particular tool here. And to get this tool, you'd go to the indicators, and you type in VRVP, and that's the visible range volume profile. So this is the one I'm using here. And the reason why this is quite accurate, when I zoom in on here, you'll see that, and that is that if you look at these candles, there's a big gap from this point at 81, and this is exactly where the price came back down to. But after that, should we lose this 80,000, then there is a big gap between where that was at 80,000 all the way down to this level here at around about 71,000. So this is where you would see a high probability play back to the upside for a counter trend rally. And of course, if you look left, and we can see quite clearly that this is the range, this is the gap at the moment. But if you look left, very strong resistance all on there. And of course, the 69,000 was the previous cycle's cycle top. So this is the opportunity for those people who've got the patience to wait until the price comes back down to the 71,000. And the way we're going to be identifying this in the private member section will be to have a look at the reversal patterns when the price comes down here. As soon as there are reversal patterns here to identify, then that will be the time to get back in to either Bitcoin or the Bitcoin miners. Okay, a quick rundown on the various time frames to just have a look at the big picture view of what's happening and where the charts may be giving us some guidance of where the path of least resistance is on the monthly, the weekly and the daily time frame. So we've covered so far over the last many weeks since we topped out at 126,000 in the absence of the Brexit indicators that we've been talking about for the last 2 to 3 years. Those Brexit indicators have not been triggered off simply because we've not had the normal blow off top that we would have expected from this point onwards. Since we didn't get that blow off top, obviously the Brexit indicators weren't triggered. So in the absence of that, there were certain other signals which were going to give us some insight and a clue as to whether we've come to the top of the bull market or not. And one of them was this blue line here, which is the 8 EMA on the monthly time frame. And this was based on all the evidence of the previous cycles, as I've shown you in the first cycle, second cycle, and the third cycle, that each time in the time frame, in the time band of the end of the bull market, at the end of the 4-year cycle, whenever we get to that time band, this tends to happen. And once again, this has happened one more time. And of course, you don't base everything on one signal. And as I'll show you with the weekly as well, that there is another signal that also seems to be coinciding in the time band of the end of the cycle with this signal here of the 8 EMA. So as it stands at the moment, without any conjecture, without any speculation, without any hopium, the fact is that we've broken below the 8 EMA, that we have topped out in the time band that you would normally expect after 35 months, as I showed you earlier. So the path of least resistance now is to the downside. And it is entirely understandable that people would think that we're going to go and make a big blow off top above the 126. And the reason why the thinking is there, but the probability isn't on your side. And as I've said before, I'm 80-20 that we're in a bear market. However, that 20% is based on that Bitcoin always has a habit of doing the unexpected. So on that basis, I'm happy to give it 20% that we're going to go back up, but 80% is to the downside. But it is very easy to understand why people think that we're going to have much higher levels. And that's based on a very simple technique the market uses in order to prevent people from selling here and buying down here. And that is a simple trick that the market uses time and time again, which I've seen over the last 30 to 40 years. And that is a technique of conditioning. And it's something that I've gone through with the private members. And that is that the same people who are calling for a big blow off top here are the same people who are calling for a further fall down here. And this happens in every single cycle. And you have to understand the psychology of that. And the technique of this conditioning that the market does is that when you're at this point, people are expecting higher prices. But then what happens is when we top out and we have a fall, people still have hope that this is going to go up. But what happens is their hope gets dashed because we fall further down. But somewhere along the line here, they start to believe that this is not going to happen. But instead what happens is that every counter trend rally, because it gets rejected and moves to a lower level, they start thinking that every time we're going to get a counter trend rally, it's going to move to the downside. So by the time you get to down here, where there is a bear market, they miss that transition from a bear market low to the start of a new bull market. Because of this conditioning that every counter trend rally leads to a new low, by the time they get here, they're expecting another low. And even if it did get to a new low, they would be expecting another low. And this prevents anybody from buying at these low levels. The charts will be giving you a completely different story to what was happening here. And there is a transition in the charts that occur. And this is the transition that we picked up here with the various bear market indicators that we used to get in at the ground floor at around the 17 and the 15,000. And by the time the price gets to higher levels, just like the conditioning on the downside, people are getting conditioned to the upside, that every time we have a pullback, we make new highs. When we have a pullback, we make new highs. So this conditioning then started around about here when people had missed this big move and then realized that we're in a bull market. And the conditioning then is that every pullback leads to a new high. Every pullback leads to a new high. So now everybody's thinking that this pullback is going to lead to a new high. But there's a transition now taking place here. So the people who were thinking that the price is going to go lower down here are the same people who are now thinking the price is going to go higher. And once again, there's this potential now to miss this move back to the downside. And this whole process will start one more time. When we get to these levels here, they'll be calling for 20,000, 10,000, 5,000, but the market will then transition back into a bull market. Okay, moving on to the daily time frame. And I just want to mention that in the private members section, all through the week, last week, we picked up this particular bear flag situation going on the daily time frame. And we picked up the new high at this point from the first high, and there were two touch points on the bottom side, and I'll go through that in a minute. But it's very important to keep abreast on a daily basis of exactly what's happening with Bitcoin. And so when we picked this up, our targets were down here. This was the 50% Fibonacci level and the 61.8 down here at 87.5. And here it is, this particular pattern, and this is part of the bigger pattern that the price has been making since we topped out at 126,000. So what you find down here, so far what's happened is that we made a low here, and then a bear flag that's broken to the downside, another bear flag that's broken to the downside, and another one there, broken to the downside, and another one here, another fall to the downside, this time a really big fall, as we saw. But now what we've got is another bear flag forming here. So as you can see with these patterns, they do have a habit of being a continuation pattern to the downside. However, we remain open, fluid and flexible because these patterns have a habit of morphing into a different pattern. But you can see quite clearly that when you pick up these patterns, the path of least resistance at this point was always going to be back to this 61.8, and this is exactly where the price came back down to. It's retested the 61.8 and then bounced off there, and the question is, can we get to the top of this channel? Now on the way back up, we could quite easily get to this 96,000. Then it does have a decision to make whether it wants to go to the higher side at this point. But the primary trend here is really that it's going to get rejected anywhere along this orange line before the move back to the orange line support here. And if it does get rejected at this point, then there is a higher probability of getting rejected here down to those levels of to around about the 70 to 74, 75,000. Okay, moving on to the 60-day cycles. And I just want to give you a little bit of the context of where this might fit in, because if you look at the previous two cycles, in the last cycle, we topped out on day 11, and the one cycle before that, we once again topped out at the top of this red candle on day 11. So far in the last three cycles, we've had day 11, and currently we've had a day 12. And this is what's happened in the past, because we do find that sometimes these patterns repeat. So just got to keep this in mind. We've got to keep this on the table. Of course, it can play out quite differently. But what happened before, after day 11, that into the midpoint of the cycle, and we're going to be coming into the mid cycle here very shortly, so there's a high probability somewhere along the line here is going to get rejected into the mid-cycle fall. So this is what's happened before, day 11, and then we got a failed cycle here, then day 11 top, and then we got a failed cycle here. Of course, it doesn't mean this is what's going to happen here and get a failed cycle, but it's certainly something to consider, knowing how weak this trend is. It may well be that we have bottomed out here, but until it can show us some strength, we have to go with the trend, and this trend is still to the downside here. So the current cycle, if we move this to the left, the current cycle should end around about the 20th of January. So the way I'm seeing it at the moment is that somewhere along the line here, either making a new high and getting rejected around this point at the 61.8, we will get some sort of a pullback into the midpoint. And depending on how severe this pullback is, it could go all the way back down here. But whatever it is, then we can expect a counter trend rally back towards the end of the cycle before the inevitable fall for the end of that cycle. Whatever that's going to be, it's going to be very difficult to anticipate that at the moment, because we really need some conclusion here. If we do get a failed cycle, then the chances are we're going to roll over very quickly to make lower levels down to those 70,000. So this is what's going to be very important, what happens in the next few weeks. And we do have the FOMC meeting coming up on Wednesday, where there's an 87% probability of the rates coming down from 3.75 down to 3.5. And of course, we've had this probability for quite a while. You would have expected that this positive news is already priced into the markets. And the danger really here is that on Wednesday, if we don't get that rate cut, you might see a big fall into this midpoint. And you never know with the Fed, instead of a 25 basis points cut, if you get a 50 basis points cut, you could get a big move to the upside here. So that is always a possibility, but the probability is more on the side of the downfall rather than the upside. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.